to another edition of Energy Action's Market Wrap. My name's Scott Easton and I head up the trading and pricing team here at Energy Action. Today I'd like to focus on recent price weakness in the electricity market and identify what's causing the sudden drop in Victorian and South Australian prices. I'll also be looking at the state of the gas market and the recent trend towards lower wholesale pricing. These charts show the significant sudden drop in Victorian and South Australian electricity prices over the past week. We attribute the timing of this with the Victorian lockdown announcements and the initial suspicion that a 5-day period would be extended. We now know the lockdown has been lifted, however prices are yet to rally back. This represents a short window of opportunity, really only available to our progressive electricity purchase customers, and customers able to respond quickly to requests for fixed price, fixed term contracts. Both 2022 and 2023 contract prices dropped, with 2024 contracts now priced at a small premium. We now believe that the market for Victorian electricity and its interdependent state of South Australia is below the marginal cost of market generation and is more likely to be a short-term reaction rather than a sustained trend. If you want to take advantage of these types of events, contact Energy Action to understand the procurement method available to your organisation. Turning now to the electricity spot market, we see prices behaving very similar in Victoria and South Australia, both averaging below $20 a megawatt hour for the month-to-date February period. South Australia's spot prices decreased by 44%, followed by Victoria's price decrease of 21%. New South Wales spot and contract markets also declined, but to a lesser extent. This was also the case for Queensland. Queensland prices were the least affected, being more distance from Victorian dispatch and because contract prices have already dropped to around $40 a megawatt hour late last year. Turning now to the gas market, where hub prices appear to be under greater downward price pressure during February, with lower LNG exports and AEMO's statement of opportunities indicating that the 2021 gas balance is likely to be similar to 2020. The outlook for gas pricing remains favourable. While the year-to-date annual price for 2021 remains above 2020, the short-term outlook is for prices to return towards 2020 levels. With wholesale gas options now available to most customers, we recommend gas customers explore this option. Many customers are now experiencing cost savings of between 25 to 40% year-on-year reductions. Well, that concludes this week's Energy Market Wrap. I'm Scott Easton for Energy Action, and remember, don't pay too much for your energy.